Hello and welcome to my YouTube channel. If it's the first time coming into my channel, my name is Joseph and I've been trading the financial markets for somewhere around 3 years. And if you trade the financial market, you trade Boom and Crash, you trade volatility index, or you trade any financial assets, consider subscribing to my YouTube channel because I'm going to be sharing with you lots of strategies, tips to help you navigate the financial markets profitably and successfully. Now, in this strategy, I'm going to be sharing with you a very simple Boom 1000 strategy that you can use to make a lot of money from the market. Now, as you can see here, this is a $100 account that was moved to $370. Okay, it was moved to $370. We have a trade that is currently running from this direction. Now, in this kind of trades, because this trade is taken from higher time frame, in this kind of trade you have to be very very patient, and also try to identify the trend of the market and trade in the direction of the trend of the market. So this video is going to be a pure price action strategy. We're not going to be using any single indicator. It's just going to be purely price and pure price actions, because basically you still need to understand price action concept. You still need to understand how the market deliver price, okay, how the market deliver price, how the algorithm works. And understanding this simple concept will help you make a lot of profit from the market, even if you have a trading indicator that you use. But you understanding the concept I'm going to be teaching here will give you another trading tool that you can add to your trading arsenal. All right, so now this strategy is just going to be a pure price action strategy. It's going to be a pure price action strategy. I'm going to show you how the market fundamentally um delivers price. Now from a very very fundamental perspective, this is how the market delivers price. In a buy condition, the market buy from point A, then it pulls back, buy again, pulls back, buy, pulls back, and buy. So this will be point A, and this is point B, this is point C, this is point D, here is E, F, G, here is G, and this place can be H. All right, so now this is how the market moves. The market moves from point A to point B, and from point B it comes down to point C. From point C it goes to point D and point E, then point F, point G, and point H. Now, typically, because this is a buy price delivery, okay, now the reason why there is point A, point B, point C, point D, and point E is because the market does not just buy continuously in a buy trend. Realistically, the market buys, makes some kind of pullback, buy again, makes some kind of pullback, buy again, makes some kind of pullback, and buy again. All right, so now this kind of pullback that happens, this pullback like point C, point E, point G, all right, this kind of pullbacks that happen here is what gives us trading opportunities. It's what gives us another kind of entry, or gives us another opportunity to join the trend of the market. Okay, now remember I said that this price delivery here is a bullish price delivery. Okay, it was a bullish price delivery. Now let's just do the bearish price delivery, so we can so the market sells, pull back, sell, pull back, sell, pull back, sell, pull back, sell. So in a bullish condition, that is what the market is going to do. So here is going to be point A, here is point B, here is point C, here is point C, here is D, here is E, here is F, this pullback is G, here is H, here is I, and here is J. Okay, here is J. All right, so now remember what I said, the market does not just buy, the market does not just sell. Like it will not just sell, that the market will not just, it can never give you that kind of price action whereby it just gives you 100% sell. No, in a sell trend, in a sell condition, there has to be some kind of pullback. So the market sells, pull back, sell again to point D, pull back to point E, sell to point F, pull back to point G, sell, and pull back. Now the good thing is that these pullbacks that happen in the market, this pullback that happen in the market, they give us trading opportunities. They give us trading opportunities. All right, they give us some kind of trading opportunities. They give us second chance to join the market. That's just the good thing about this kind of pullbacks. So fundamentally, you have to understand this basic concept and find a way to ingrain it into your subconscious mind. So you have to understand that in a buy condition and in a sell condition, there has to be some kind of pullback, either 50% of the main trend or 30%. Okay, but there has to be some pullback. The market still continues selling, then pull back again, selling, pull back again. So this is just basically how the market buy and how the market sell. All right, so now you have to take note of this very important concept. Whenever the market buy, okay, it pulls back, giving you another chance to join the trade. Okay, buys again, then pull back, can pull back to 50%, or you can pull back to somewhere around here. Okay, then continue buying, pull back. Okay, so now in this strategy, the first thing we are going to be doing is we're going to be identifying the trend of the market. After identifying the trend of the market, we now wait for pullbacks. This kind of pullbacks that is going to happen here. Okay, pullback that comes back to the next zone that gives us another trading opportunity. So we have to wait for that pullback and align it to the direction or to the direction of the trend. Okay, so you have to align it to the direction of the trend. Now a very simple way, let's go back to the chart. A very simple way to identify the trend of the market is by going to higher time frame. Okay, when you're in higher time frame, such as the daily time frame, weekly time frame, and the 4 hours time frame, you'll be able to identify the trend of the market. So previously this market was buying, all right, but when it got to this zone, it started selling. All right, so look, this was just exactly what I explained to you in those previous charts. The market will sell back to another point, then pull back again, sell back to another point, then pull back again. Okay, giving us another selling opportunity. So the reason why I joined this trade is because the market has pulled back to another point. All right, then another very important thing you need to take note of. Let me just mark this. Let's say here is point A, here is point B, point C, point D. Hope this is making sense to you. Point E, here is point G, and here is point H. All right, so the market sells from point A to B, pulls back, sell, pull back, sell, pull back, sell. If you add this simple concept here to your trading, to your indicators or your trading knowledge, it does help boost your trading arsenal to help you enter trade in very good direction. All right, so now this was just what happened here. The market pulled from point G, okay, and the market is heading to point E. The market now came back to this zone here, all right, and we are now joining this trade from here. Okay, and I'm expecting this market to sell. So but look at what I did here. In the main charts, I have this green zone. This green zone is my first take profit zone. Okay, because it is the middle of this range. Okay, it's somewhere around the middle of this range. So when price comes to this zone, I can now start closing some of these positions I have here. When price gets to that zone, I can now start closing some of these positions I have here. All right, and this zone here, this will be my final take profit zone. This will be my final take profit zone, because this market is in a sell trend. Remember I said the market is in a sell trend, so the market is still going to break this zone and form another new lows around here. Okay, so when the market comes to somewhere around here, this is where I can now book my final profit, and hopefully this account would have moved from $100 to around 600 or $650 in profit. Okay, so guys, hope you learned one or two things from this strategy. Thank you for watching this video. Make sure you like this video, make sure you subscribe to this YouTube channel, and see you in my